Live, Bronwyn.
I'm Bronwyn Nielsen for BizNews TV, and I'm talking to Piet Viljoen from Counterpoint Asset Management. Thank you very much for your time, Piet. Well, it looks as though there's a flurry of happiness in the markets again, and that we've got temporary Evergrande. Of course, Pete, I know that you look through all the noise, you long-term in your investment themes, but you must have been listening to all of the happenings of the last couple of days with interest, given your view on China, and that China is potentially something that is going to throw us all to the wolves in the medium term.
Well, I'm not sure it'll throw us all to the wolves, but I do think it's a risk factor that bears watching. And what's happening in China has actually been telegraphed from a long way out already. I mean, from the first regulatory interventions by the government almost a year ago now, they've been telegraphing that they want to change the way the economy works. They want to change the structure. And being the type of government they are, they're busy doing that. So I think any investor in China would have seen the signals coming and would have, I think it would have probably been wise to have been cautious around the prices of assets in China, how they will react to the government interventions there. And I still think it's one that bears watching, although right now, given the sharp declines in many of those asset prices, maybe it's time to start doing some research, doing some work, finding out whether there are investable companies there. So, it's normally when the bad news hits and everybody is very negative, that prices start getting to attractive investment levels.
So on the local front, we had Remgro out with really robust results yesterday. Any thoughts on that front from your perspective? Is Remgro a company that you have been interested in? Although, again, as an investment holding company, I would assume that you are happy to make those decisions yourself rather than allow for entry into an investment holding company.
No, I do think I disagree. I think there are there are quite a few investment holding companies where the management actually adds value and that generate good returns over time. Unfortunately, the past 10 years, Rembrandt has not been one of those, but it seems like things are starting to change there. They're actively unbundling assets. RMB unbundled FirstRand, Rembrandt then unbundled FirstRand, RMI's Discovery and its unbundling Momentum, Metropolitan Momentum. So they're actively taking steps to improve shareholder value, and I think that is a sign for shareholders to start looking at Rembrandt. So despite its poor performance over the past 10 years, maybe things are changing. Maybe they got the wake-up call to say, hang on, let's take some positive action to increase shareholder value going forward. And I think given what RMI has done, a lot of companies can learn from that, how to increase shareholder value.
Peter, I've also just looked at your Twitter feed, and correct me if I'm wrong, but you've got quite a hard line on ESG and this trend that obviously many people feel is such a hot investment theme. Now, traditionally, you stay away from hot investment themes.
Hot investment themes, I start running the other way. That's right.
Exactly. And you look at Sasol, coming out, the company's going to look at its emissions, going to really focus on reinventing itself, 2030 target, 2050 target. But give me your sense. I mean, this is something in your view that is just overdone and really has no value from an investment theme perspective.
So I think very importantly, from an investment perspective, is key. Any long-term investor looks to its investment companies to be sustainable and subscribe to all those good things. Because if you want to make a long-term investor, it's pointless investing in a company which does things which turn out to be unsustainable and goes belly up. You don't want that. But if one looks at what a lot of companies are doing now, they are pandering to the so-called index builders who rate companies on their ESG ratings, and they're doing all these things to get things that are going to have a better weighting in that index. But at the end of the day, what's happening is that sensible outcomes are being ignored, and you're having lots of very severe negative unintended consequences. If everybody starts saying we're not going to invest in coal anymore, financing new coal mines, our base load energy generation capacity will disappear in a couple of years' time, because the coal mines can't invest in expansion and the coal will run out, and that is our base load. And then you have in the UK over the past few weeks where energy prices went through the roof because the wind stopped blowing and the sun stopped shining. And then they had a problem with their nuclear base load, which they import from France. They had a problem with that cable, and they didn't have enough base load energy. They had to start importing gas, and prices went. And I think for developing countries, that is a very negative consequence. So it's all good and well having clean energy, but you need to have energy, clean energy or renewable energy is not sufficient on its own. You need baseload capacity. Nuclear, ideally, that's probably the cleanest energy there is. And West Africa is, unfortunately, we still have to use coal for quite a while. And by the way, just on that, a lot of renewables with batteries, that'll give you baseload. Well, what goes into batteries? A lot of dirty stuff goes into batteries. So it's fine once the battery's there, but to get to a battery, you need lots of copper, you need lots of metals, all dug out the ground, which is a dirty business. And then one day when that battery life is finished, you got to dispose of that battery. And where do you do that? And how do you do that? So you have to consider the whole value chain of so-called clean energy to make a judgment call on that.
You're not going into renewable energy in any space, are you, Piet? Or are there pockets of interest that you deem worthwhile from an investment perspective?
I think what I said earlier, when things get hot, I run the other way. Renewables are very hot.
So this is just too hot.
Very high.
Too hot for you.
Yeah, too hot for me. The prices are just too high. I don't think it makes investment sense. At some point in future, it will make sense to invest in those things from a outside passive minority, which is what we are. It might make sense to invest in it. Right now, what makes sense to invest in is coal mines. Coal mines are cheap. They produce something we need. And I think our investors benefit from the returns that coal mines can produce for them.
How do you look at something like Sibanye-Stillwater then, with obviously their diversified metal portfolio, gold? Yes. I see you're going to take this one and run with it. Tell me where you think Sibanye is going.
Look, I think Neil Froneman is a good capital allocator. He did fantastically well to diversify out of gold into platinum, palladium, and now he's diversifying into lithium. And I think if the renewable energy plans and electric vehicle plans that people are talking about, the amount of electric vehicles and the renewable capacity gets installed that people are talking about, it is going to need lots of copper and a lot of lithium, a lot more lithium than we are producing at the moment, and can be reasonably expected to produce in future. So I think that isn't a bad bet to get into the lithium side of things. But let's see how that plays out. But I think in the resource sector, you can do worse than have Neil Froneman allocate capital for you.
So I want to find out some of those areas that you are pursuing where nobody else is going right now. And
coal mines.
All coal. So this is a coal theme. Is that it?
Yes.
I just go after it. I just buy up coal across the board here.
You just buy everything that the ESG guys don't want anything to do with. Coal would be top of the.
All right, that answers it. So the best entry point for that, what am I looking at? Is this do I go into a Kumba iron ore?
In South Africa now, I think we have a couple of entry points. I think probably the most diversified and the most interesting one is Glencore, which has been buying coal mines from people like Anglo American for 1 and 2 times earnings, because Anglo's is pandering to ESG activists and saying we're selling our coal. So Glencore is buying that up, which is a good thing, because if an incumbent owner of a coal mine sells it for ESG reasons, they could sell it to some nefarious operator who doesn't care about the environment at all, and the outcome could probably be worse than if it was owned by a responsible owner like Anglo American or. So Glencore is buying up these coal mines, which are being forced sales, which are being sold almost in a forced situation by people like Anglo's for prices. And then they also have copper and other metals as well. So I think Glencore is a very interesting situation listed in South Africa. That would be top of my list. Second is Exxaro, which is sort of half coal, half iron ore. So the iron ore price has been coming down a lot, but the coal price has been going up a lot. So I think they've done very well out of that. That's another option. And then Thungela, which has been spun out of Anglo's just recently. Rand to 70 Rand in a space of a month or two. And I still think that that's got legs as well. So there's a couple of options here in South Africa that you can take advantage of.
What I want to know, sort of the day in the life of Piet Viljoen when it comes to what news flow you pay attention to. So obviously one of the headlines at the moment is the federal market, the FOMC.
FOMC,
so,
yes, yeah.
Exactly. Is this something, and there's this, well, they're bringing forward their monetary stances, and we're going to see, because the economy is heating, at a better pace than they thought, they'll begin the tapering. Do you pay attention, or Piet, does that not feature in your universe?
Things with interest, or other people's summaries of those things with interest, but they don't determine my day-to-day activities at all, and they don't influence what I do. Basically, I read a lot about companies and what companies are doing, what companies are saying, and that informs my thinking about what to buy or what to sell and at what price to buy and sell them. But mostly I read. I mean, that's my day. I mean, I don't trade very often at all. It's my day is spent reading annual reports, reading Twitter is a huge source of information for me. If you curate your Twitter feed properly, you can get a very, very rich source of information there. So my day is spent reading. It's very boring.
Now I want to look forward to the very public Twitter challenge, the Crystal Challenge, that David Shapiro. Obviously, David is a regular interviewee here on BizNews TV. The last reading I looked at, you were leading that Crystal Challenge by a huge amount. I mean, I think you were up 67% on your portfolio. Just give me some insight into the companies that you have put into the fold there, and why you do so.
Look, I mean, those sort of challenges or competitions are quite a lot of fun, but the outcome is mainly determined by luck. So I've been very lucky this year with that competition. I think I picked 5 stocks. Of them are in the fund I manage, the Counterpoint Value Fund. So I limited myself to the stocks that are in the fund. This one that's done best is Avenge, a construction and engineering company. That's gone from like 1 or 2 cents to 6 cents. So it's gone up a lot. Another stock that's done very well is MTN. That's doubled or just over doubled this year so far. Net One has done fine. It's done very well, and I still think that one is super cheap. And the 2 that haven't done that well, but I still like, British American Tobacco, and I think the other one was, I think I chose Absa Bank, and that's done okay, but not, or Nedbank, Absa or Nedbank, one of those 2. I can't remember.
So Net One, you believe, has still got some space to go.
What they're doing there is they're sitting on US dollar cash, which is equal to the market value. So basically, you're buying cash. And they have this fledgling South African fintech business with a fairly large installed base, which they inherited from the old application business, which fell into disfavor with SASSA, and there's a whole rigmarole going on there. It wasn't too favorable for Net One at that time, but that management team has left. It's been Value Partners came on as anchor shareholders, has appointed a new management team. So I think they've got a nice base to build a very good fintech business out of, and they're not being given any value for that yet. So I think on a longer term view, there's a good chance that business could evolve into something substantial over time.
Piet, thanks for sharing your insights. Piet Viljoen from Counterpoint Asset Management here on BizNews TV.
Thank you, Bronwyn.